Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Monday, April 4th. As we continue on in 2022, watching the gold and silver markets. Hope everyone had a great weekend. And joining me today to dig into the gold and silver markets is Michael Wood of Reyna Gold, partner company to Reyna Silver, run by Jorge Romero Monroy, who you've all seen on the show several times. And Michael, it's interesting to have you in here, obviously experienced in the gold market. You're also over in Hong Kong. And there's a heck of a lot of things happening in the world. So I'm excited to dig in, see what you are seeing and what perspectives you have, especially someone who's, essentially your boss is your shareholders. So I think there's a lot of people watching that have a lot of questions, and I think this will all be a great time to dig into that. So welcome on in, and how are you today?
Yeah, great. Good to be here, Chris. No, very interesting times geopolitically and definitely in the gold market and the metals market as a whole. A lot of interesting things happening.
Yeah, I would say so. And we will pull up a quick look at the gold and silver prices today. Here on the Kitco chart, quite a volatile start to the week. Call it 2460 last night, rallying a little bit. And then something happened today that just got carpet bombed about, let's call it 50 cents lower, then rebounding, fortunately. I don't know of any impact going on there aside from Wall Street trading, which we will dig into. How correlated are these markets? Fortunately for the gold fans, see gold up $8, while silver now down only 18 cents, so recovering a little bit. And again, as I mentioned, you can find out more about Michael at Reyna Gold. So with all of that said, and we'll check in about Reyna Gold towards the end, so if anyone wants to know some more information, they can be aware of that. Michael, what do you think overall in the gold and silver markets? Gold still not too far off from $2,000. Silver, half of its 1980 high, and some of the reasons that have seemingly driven gold towards 2000, whether it's the inflation reports, the things going on in Ukraine, or elsewhere around the globe, seem to have escalated. So where does that leave people, and what do you think's happening right now?
Yeah, just firstly on gold, I think that the pegging of the ruble to gold is an unprecedented move in modern times. We've gone back to a hard asset-backed currency, which we've not seen really since 1971. And I think we're seeing a situation where the weaponization of the dollar that's materialized over the last few years is driving people away from it. Gold is the traditional neutral reserve asset that people are happy to exchange and deal with. So yeah, very interesting. The Russians have gone there already so soon. I think they're getting support from most of the Eurasian land bloc, India, China for sure. It'll be interesting to see what happens with the Saudis and the rest of the Middle East. So for gold, I think it's very good. And I think it's pretty much put a floor under the gold price. I don't keep up to date with the exact ruble exchange rate, but last week when I looked on Friday, the pegging was basically 1940 US dollars, the ruble floor. So I think, and you see it, there was a really nice move in the gold miners the end of last week. Now, once you start to see a floor under the gold price, I think the gold mining stocks could really start to move. It'll be interesting to see how they do this week. They're up at the start of the week. I think they've come off a little bit since the open, but a pretty good start. So on the gold market, I think very interesting times. I think we're going to see more and more people having to get rubles. It's going to be fascinating to see what plays out in Europe. The Russians are saying, we turned off one gas pipeline into Germany. You got to pay us in rubles. Now you can get gold to get rubles. Let's see what happens. The Europeans are standing firm for now. I think the Russians will stand firm too. And I think lots of people buy the Russian gas, where the Europeans have to get their gas basically from Russia. The US is trying to export LNG, but it's not going to meet the demand anywhere near. So I think the Russians have the upper hand for now in this dynamic, and definitely it's good for gold. Moving to silver, silver is very, very interesting. I know you're a great expert, Chris, in silver. And I think one thing that really kind of caught my attention for silver is what happened to nickel. Right? You see what happened with nickel. We all know silver's suppressed, just like nickel was. It was interesting that it was being suppressed by the Chinese, which I don't think most people expected. But the massive move we have had in nickel was amazing. And one very interesting thing is, the options on those nickel moves were never paid out. So this is an even greater reason why you want to own physical, right? You think, oh, okay, I'm long nickel on options. I've just made a fortune. Oh no, I haven't. It's not being honored. So it also just shows you really want the hard assets. Okay, you can dabble a bit in the paper, but I think, silver is a similar situation. We all know it's been suppressed for a long time. At some point, it could break out, maybe not as aggressively as nickel did, but definitely very aggressively. And, it's holding in this kind of 24, 25 range. Interestingly, in Asia hours earlier, Chris, silver was up 1%. Now you just showed it's down. So, but we often see this. Up Asia, up part of Europe, and then once the US starts to come online, gets hammered. So, I think very positive times for both of the precious metals. And we're starting to see metal shortages across the board, not just the precious metals, but copper, nickel, obviously, lead, zinc, also now starting to have supply issues. And this is all going to add to this inflationary dynamic that we're already experiencing, not just from energy, not just from supply chain issues, but also from metals. And there's going to be other inputs as well. That there's been such underinvestment in these metals for basically 10 years. We're going to have a crunch, and we're already seeing that in the early stages of this cycle.
Yeah, it's a handful of interesting things that you mentioned there. And as I pull the silver chart back up, it looks like I missed. We actually had Jamie Dimon's take on the Russian sanctions. Maybe for fun, we can dig into that a little bit later. But a few things I wanted to mention, you comment on there about how the gold price fell. And because I was talking with Bill Holter over the weekend, he says the gold price, when it plunged last week, came right about $10 away from the implied ruble floor, which I thought was interesting. I remember when they first announced the floor at the rate of the ruble then, it was right about like a $1,500-$1,600 gold price. But obviously those rates are changing quickly with everything that's going on. So like you point out, it seems like it should be implying a floor on gold, which would certainly be good news for the precious metals. Here we have, this was an article from Ronan Manley talking about a paradigm shift Western media hasn't grasped yet. Russian ruble relaunch linked to gold and commodities. So it's interesting things that are happening right now. And again, any comments specifically? It seems from what's being reported that this is moving forward. And again, you're seeing it from multiple sides, east and west. So what do you think about that?
Yeah, I think this is I think this has been planned basically since 2014, when there was the initial invasion of Crimea. And I think at that point, the Russians and the Chinese realized they had to get away from the dollar. Like, there's a lot of talk in this part of the world that the number one policy now of China is to de-dollarize, right? So for a long time, the number one policy of China was urbanization, job creation. They had to create 20 million jobs a year to get these people into the cities, to urbanize China and move it away from this poor rural country to a modern industrial country. Now that's happened. And actually last year, 2021, was the first time there was actually a decline in the Chinese labor force. It declined by about 3 million people. So it's gone from 20 million add for year. And last year, 2021, there was a decline of about 3 million people. And projections are by 2030, the Chinese labor force will be declining by 10 million people per year. So pretty substantial. So the argument is that those policies are gone. China doesn't need to live like that. China doesn't need to be the engine of the world, exporting product all around the world. Actually, it wants to create domestic demand. And if you look, an interesting thing is the strength of the RMB, really since the start of COVID. If you look at the RMB, since COVID, it's gone up. It's been one of the best performing currencies globally since 2020. And I think the Chinese now want to create a strong currency, give people more confidence in the RMB. I mean, it's a managed currency, the RMB, to help them move away from the dollar. And then what's happened with Russia, I mean, I think this has all been planned. I think that the invasion of Ukraine was a reason to get kicked off the US dollar SWIFT system. Russia is the biggest energy exporter in the world. I was looking at this a few weeks ago when it all kicked off. Like, global trade last year was $20.8 trillion. $5.3 trillion of that was oil and gas, many done in US dollars, right? And the whole petrodollar system, as we all know. But if most of that, well, all of that Russian energy is not going to be paid for in US dollars anymore, and then it'll be very interesting to see what the likes of Saudi Arabia do as well. We can see there's definitely a tug of war going on right now between Russia and China and the US with Saudi and how they price their energy. So yeah, but then it's not just energy, it's metals as well, like we talk about nickel. Russia is the biggest producer of nickel. And that move was crazy. Russia is a big producer of gold and silver. I don't know if you saw, I was reading at the weekend, actually, Alistair McLeod, who writes a lot of interesting stuff, the Gold Money guy, he was saying that he's heard that Russia has 12,000 tons of gold, right? So, the US has allegedly got 8,000. So, okay, all of a sudden, if this is true, Russia's got, substantially more than the US, substantially more than the EU. And then who knows what the Chinese have? I mean, Alistair was saying he thinks the Chinese have about 20,000 tons. So if you add that, they've got 32,000 tons between them. Then you add in India as well. How much has India got? And one interesting dynamic as well in this part of the world, Chris, is the governments have encouraged people to suck in gold, right? So it's not just the governments and the institutions buying. They've encouraged the masses to buy gold. In China, WeChat, which is like WhatsApp in the West, you can literally just send your friends gold on WeChat. So when it's your birthday, you can send like a gold red pocket, and you can convert that for physical gold. You can go and you can convert your WeChat gold red pocket and get physical gold, right? So they've done all these mechanisms where they're encouraging the people to suck in gold, and it's been going on for quite a while. Really, definitely the last five or so years. And I think 2014 was a key point where they've started planning this ever since then. This de-dollarization, a move away, and I think this Ukraine invasion. I mean, we all know. Putin went to see Xi Jinping at the Olympics, when was it, February? And, they're very friendly. I was looking at it. They've met, Xi Jinping and Putin, actually, how many times? They've met 38 times since 2013. 38 official meetings, not always in person, but 38 official meetings since 2013. That's a lot of meetings for two global leaders. So, I think these guys are pretty close. We'll see how it plays out. I think China's now obviously getting put under pressure to distance itself from Russia, but so far it hasn't.
Yeah, there's certainly a lot of things that'll be interesting if we ever find out one day. I was watching something over the past week from the Corbett report, which was showing that even Putin has at times participated in some of the World Economic Forum things at Davos, and maybe just makes you realize the more you read and try to learn, the more who knows what's really going on behind the scenes. Yet in the end, interesting, you mentioned 2014, right around when, at least I continue to hear, is when things started with the Ukraine situation, although I guess in some senses goes back all these things a lot longer than that. Yet here we are left with, and I'll quote from Ronan's article, with the new gold to ruble linkage, if the ruble continues to strengthen, for example, due to demand created by obligatory energy payments in rubles, this will also be reflected in a stronger gold price. Here, an article by Tom Luongo, who I think some people are familiar with. Actually, I believe will be on the show later this week, hopefully. And he says, to be clear, Russia just broke the paper gold suppression scheme. Again, you mentioned Alistair McLeod citing some bigger gold numbers than we've seen. I've heard throughout the years some big, even numbers suggesting bigger than that as well for Iran. Of course, there's a lot of gold that went somewhere after World War II. I don't know the exact location of that. So again, there's a lot of things out there that seem to be pointing in one direction, but what do you make of all of that? And do you think that really this will be something that will propel us through it seems like the government's capped gold at 2,000 and silver at 30, and everyone's wondering, well, we see what's happening, but when does it matter? And what would you say to any of that?
Yeah, exactly. Yeah. I mean, I think for the gold market, this is, again, there's a flaw. And you rightly point out, if the ruble keeps strengthening, then the gold peg also keeps strengthening. So yeah, it will be very interesting to see how it goes. And shortly after doing that, turning around to Europe and saying you got to pay in rubles is basically telling the Europeans they've got to get their hands on gold to get rubles. I don't think that the Europeans are going to be exchanging euro directly for ruble. So that's going to create massive buying for gold. It's definitely a game changer in my view. Let's see how long it lasts, right? It is actually only a temporary peg. I think it's, I don't know if you can grab the date, Chris, it's sometime in June. They fix it at this rate, but then also maybe it's just that rate. I think it's 5,000 rubles per gram until June something. I forget the exact date. So maybe they revalue it then. But short term, it's good for gold for sure. It's put a peg, it's increased demand. And everybody really in this Eurasian landmass, like you say, Iran, or a lot of the Middle East, they all love gold, right? They've always had a strong affiliation with gold, and I think that has been increased by these recent events over the last few weeks. So for gold, it's definitely a very positive change. For silver, yeah, let's see. I think my view is that that's going to get more case of the shorts will get blown out just like in the nickel market. Let's see what it is. I mean, there's increasingly supply issues in silver. The deficit is definitely real, has been for a long time. So at some point, those paper shorts are going to have to cover, and we could have a massive re-rating in that market.
Yeah, certainly some interesting dynamics. And maybe you could compare, you mentioned silver in comparison to nickel. You could make the case that what we just saw in nickel is actually quite similar to what we saw in 1980 in silver, where, I mean, I would certainly suggest that it took a series of crimes to get the price back down. Look who, again, we have involved in nickel. There's JP Morgan, who was, on the hook on the buy side. They have their client on the sell side. In the end, the price is going up and down, left and right. And somehow other people are getting their trades canceled while JP Morgan seems to be getting made whole. And yet, I mean, it's left unresolved. It's certainly not something that I watch happen and say like, hey, let me go trade, where, if I win, the trade's canceled. If I lose, I'm on the hook. Again, similar dynamics. Why, I continue to wonder if the debt is ever resolved, if this paper short position in silver is ever resolved, you would think that would be a move to the upside. Yet, we've seen the power of Wall Street and the Fed's tricks where, it seems like banks are going insolvent, yet they pump up the swap lines and just life continues on. And fortunately, it seems like you have enough experience on the finance side of this that, you're able to put all those together. And again, where does that leave things, and especially with nickel and silver?
Yeah, I mean, and I think you're one of the people that's done really good work on this. The play on silver is when the COMEX doesn't, if everybody asks for physical delivery, they can't deliver. But they make it so difficult, right, for the average person to get physical delivery. They make it as hard as possible for physical, to say, okay, I've got this contract, I want physical delivery against it. I mean, that's the way it blows up. They can't, they trade so many more ounces than they can get their hands on. But yeah, I think it's just another case of why you want to have the physical, because the risk of these paper, it's just like fiat currencies, right? We're seeing this, we're going hard asset-backed currencies. And I think also in a bigger scheme, I think we're going to start seeing it out in stocks as well. We're going to go from this growth value, we're going to go from the growth era where these companies have no assets, the likes of Airbnb and Uber, zero assets, to companies like Barrick and Rio Tinto and the likes that have amazing assets, produce a lot of cash flow. We'll go from this growth, no assets, to this asset value back stock rotation. I think we're already starting to see it. And I think we'll see that in across the board in multiple parts of the economy. So yeah, I think, the thing is on silver, they can keep playing this game while they can get away with it. While they can keep having these contracts rolled without having to do the physical delivery, they can do it. But it's increasingly becoming a risky game, right? As the deficits, the ability to get your hands on silver gets harder and harder. And the more people going long gets greater and greater. So we'll see how it plays out. I mean, we see it can move very quick, very soon. And $25, you do a lot of great work, Chris. I think $25 silver is a bargain, right? There's increasingly, all the work we do at Reyna Silver and all the other silver exploration companies, it's increasingly difficult to find silver deposits because most of them have been mined, right? The amount of silver left in this planet is not that much. And we need it for so many things. So, and you can say that across a number of metals. So we've got definitely supply dynamics where there's been suppression of price for a long time, really since 2011, has resulted in a massive underinvestment in the sectors, falling supply, increasing demand, and there's going to be a crunch. And as we see in nickel, it can be very violent when it happens.
Yeah, certainly can be. And it's interesting because I guess we have the retail silver market, which is in many ways cut off from the wholesale institutional silver market, on some degree of connection, if you consider there's a finite source on some level. Yet while the COMEX says 25, I guess we'll see, as you mentioned, how many people can actually get metal out of there. But at least for the people who have bought retail silver, again, I suppose this depends if you're sitting there from 2012 and have, a couple of $40 ounces that it's not going so well on those. But I don't know, some people the day that silver dropped below $12 were picking up the phone, and I guess it has moved and pressured that short position. You could say the move from 12 or even 15 or 18 when it finally shot through $20 went straight up to 30 before Ross the Boss tamped it down. So I mean, I guess in hindsight, you could say we've already seen one short squeeze envelop. Yet for the retail market, let's say you bought Silver Eagles. I mean, those are up. The Silver Eagles, I think, aren't they over like $40 right now? I'll pull up a retail dealer, but some of the premiums, especially if you can find a good buy to sell something back, those actually have gone higher.
Yeah, they're actually the hard assets. And, I think that Keith Newmeyer does a lot of great work at First Majestic on this, right? Keith is one of those advocates. Why don't we just sell silver to the end user? And let's not sell to the banks. Let's just sell it directly to the likes of Samsung or whoever that wants to buy it. And I think Keith is a great advocate he's trying to do that. And I think if more of the suppliers actually did that, cut out the banks, they wouldn't be able to get their hand on this physical metal. That will also help. But yeah, I think the more people that buy physical silver, understanding it's a finite resource that is pretty scarce and will go up in value over the coming years, decades. The more issues is going to be controlling this paper market.
Yeah, and here we see American Eagle. Well, if you get 15 or over 500, over 100 rather, you get under $40. But there you see that spot price, $24.86. And if you just want, I mean, $40, $39, $38, however you're looking at it. So about, gee, I guess that's over a 50% premium if my math skills are still firing there, Michael.
Yeah, exactly. Exactly. That's the way I would do it too. It's 40 to buy the physical, 24 to buy the paper.
Yeah, and obviously the premiums on the Eagles higher than many of the other coins. But in fact, that one of the things I've been thinking about that could be helpful, and actually I've talked with several people and is in some stages of being designed, but being able to, I think people get frustrated because there's often not a bid. So, if they buy their Eagle at $35 or $40 and then want to sell it back, if a dealer says, well, I'll give you $1 under spot. I don't think that is often the case with most dealers, but I think providing liquidity to the silver market is something, just if you can tighten those spreads a bit in any capacity, is something that I think would be helpful for the retail investor. So that, in that sense, regardless of what the COMEX is doing, to me, that's a market. I bought my silver at this level. A lot of people are buying it, and the demand of at least what's allowed to get to us average peons. If the supply goes down and the price goes up, I think that's also something that could help mitigate some of the manipulation concerns. Would you agree there?
Yeah, I agree. I think there needs to be more liquidity in exactly the retail physical market. We need to get more dealers active. Yeah, a friend of mine actually is leaving Hong Kong for good. He was telling me today he decided to sell his physical silver. He's moving to the Middle East and then rebuy once he gets there. But yeah, it's not easy to say. He had quite a lot, so he had to go to one of the banks here, and it was quite cumbersome. So yeah, there needs to be more liquidity, I think, for people that want to be in and out. It would definitely help stimulate demand.
Yeah, I mean, and I understand why it can be daunting for many people who get involved in the silver market. It's not. Someone asked me in an interview the other day, well, what's going to happen to the price of silver? And I'm like, well, that depends on a whole host of things. You have the manipulation thing. Then you have the wide spreads. You have, sometimes people are out there passing products that, I don't run into too many stories of people getting things that aren't actually silver yet. Versus if you buy a share of a stock and you realize that, geez, I got myself in over my head, the spread's a couple pennies wide. And I think these are some of the things that can help the industry overall, so that, hey, there's just not as much friction to be able to do something for solvable reasons. And you mentioned Keith Newmeyer. and how he's withheld metal from the COMEX. Endeavor has withheld metal from the COMEX. I believe Avino Silver has withheld metal. That's actually a project that I'll have an update on soon, because I think a lot of the companies don't know that some of the shenanigans that are going on, and even contacting some of the non-primary silver miners and saying, hey, this is what's happening. You know, I understand you have your business decisions, but before you're just tossing your silver out there, something that is more equitable for the end user and for the guy that's taking the risk to go dig it out. Because it's just like you said, the nickel market, you have that same dynamic for an entrepreneur and the shareholders to say like, all right, I'll go back this guy on a silver company, but what's the deal if the government's tamping the price at $30? You know, it's again skewing the incentives. I feel investors at least have a right to understand these dynamics, and you know, and again, hopefully people like you and I can help fix some of them.
Yeah, as well. And I think another dynamic that would be interesting to see is like, actually, like you say, some more and more companies are withholding. Yeah, just hold silver on their balance sheet. You know, say, okay, you know, I've got $10 million of cash and I've got, you know, 1 million ounces of silver on my balance sheet, and I'll sell that 1 million ounces when I think the price is right. Just also the companies start to hoard. I think that would also be an interesting dynamic in the market. We'll see if it happens. And same with the gold. I know Eric Sprott for a long time, he's been talking about getting like some of the big, like Kirkland Lake, which he was obviously the chairman of for a long time. You know, he was very vocal saying he would like Kirkland Lake to hold gold on the balance sheet. So it'll be interesting to see if that dynamic plays out as well. I think there's a good chance it does if we're back into a really good precious metals boom. You know, once you believe the price is going to be greater in 5-10 years time, then you know it's asset appreciation. It's good for the company. So that would be a good dynamic as well as withholding. Yeah, they start reporting. Okay, you know, this is the balances we have. It would be good to see that too. I think play out.
Yeah, and fortunately, I that's the part that gives me hope and encouragement in regards to silver, is that again, a lot of these things, I think when people understand what's actually going on, can go a long way. And now I haven't released this yet, although I did contact a lawyer who has experience in the whole precious metals manipulation type cases. Seems like you really have to like shoot someone in public these days to actually get caught, penalized, and stopped, as we know, following JP Morgan and Goldman Sachs. Yet to the degree that in the process of wanting to write something that was really clear that, all right, we sent to the lawyer and of an update on how that went, but still that now, hey, here's what happened Silver Squeeze weekend. Here's, you know, some other occasions, but here is clearly something is off. And if you don't want to get torched by it and have your money lost, all right, let's at least discuss what the options are. So, you know, I think that will be helpful going forward rather than, you know, it is an unfortunate situation. It's like, what do you do when you find out your own government spending money to distort markets and then lying? I mean, so it is what it is. But again, it's nice, the things you mentioned about how there are people out there that want to have something more equitable. Although with all that said, Michael, at $25 silver, 1950 gold or so, where does that leave the mining companies? Because for people who are saying, all right, well, if the thing is capped, you know, let's say the prices stay here or have the ability to go lower, you know, how would I look at a miner? Although, you know, there's a lot of, especially companies that are at different stages, but what could you say in general to folks who are facing that question every day?
Yeah, sure. I think it's good to look at the whole sector. And, you know, you see last week, Newmont hit an all-time high. So, you know, Newmont and Barrick are the biggest gold miners by quite a way now. So they're the big major producers. They're making a lot of money now. You can see their all-in cost is about $1,000. You know, so they're selling for like $9.50 profit per ounce. You know, so they're creating a lot of free cash flow. They're paying good dividends. They're still relatively cheap stocks that a lot of the institutional money's not in. And I think it is flowing into it already. And then that will trickle down through the whole sector. So, you know, you got the producers, you got the mid-tier producers, the smaller producers. Then you got the development companies that already have a substantial asset in the ground and are developing it for production. And then you have companies like Reyna Gold, we're explorers. And that's really the cheapest way to get your hands on gold. So, you know, we have gold. We're now just working to prove up an economic deposit. And that's really the cheapest way. You know, it's the greater risk end of the spectrum. And I think really for people that are new to the sector or want to invest in the sector, you should invest across the whole spectrum. So buy the producers, buy the big producers, the mid tiers, the small producers, the developers, and some explorers, and then you get good exposure. But the dynamic, Chris, and I think you're familiar, and probably a lot of viewers, because we've been really in a bear market since 2011 when the suppression of the precious metal started. There's been very limited investment in production. So the big majors, they've seen big rundowns in their reserve balances. So they want to acquire, and they have been acquiring. And it's good to see, at the end of last year, there were some big deals for pure cash. They're not using paper anymore. They're paying hard cash for assets. And then that trickles down. So they then buy the mid-tiers. The mid-tiers start investing in the explorers. The explorers start making the discoveries, and the whole sector's coming to life. So, I think it'd be good for, the last bull market was really kind of 2002 to 2011 in the gold equity space, and have a look at the explosive growth that you saw in these equities. And I think we're in a very similar time to them. We're rotating from the dot-com boom then to now we're rotating from these very high valued growth stocks into hard assets. And I think the gold miners will do well in this space. And there's a lot of pent-up demand, I think. You've probably seen all these quotes about like the amount of institutional money in the sector. And like what if the whole sector is like a fraction, I come off the top of my head, but the whole gold mining sector is a fraction of the market cap of Apple or Amazon, etc. So it's not going to take much money to really move the sector.
Yeah, it would seem like one of those situations that when the dam bursts, that's when it could be the exciting part that I think is at least a big part of what drew me in. Although, would you say that if someone had a good mix of companies that even whether gold was 1900, let's say it went down to 16 or 1700, but if you had that it's possible that if you have a good mix of companies, if they're executing on their plans, even if you buy the stock at today's level, that these, you even have room in the gold and silver prices for companies that match what you're looking for, if done properly, that you can still be okay in this environment?
Yeah, definitely. I think let's see what the Q1 all-in cost is, but it's been around 1,000 now for a while. So that's the $1,000 per ounce is roughly the all-in cost of production for the sector. So even at 1,500-1,600, the industry's making a lot of money. It wasn't that long ago. What was the low? Because you probably remember 2015, 2016 in gold, it was about 1,000, 1,050. And really since then, we've stabilized, and we've obviously had a big move up since the outbreak of COVID. But yeah, the industry is making a lot of money, even at $1,500, $1,600 gold. And the industry needs to invest. The industry needs to get new assets. And the stocks are cheap. They really are. You have a lot. Most of these companies are trading on a PE sub 10. They're paying a good dividend. So I think from just a pure value perspective, for the generalist investor, it looks attractive in a market where there's not very many attractive opportunities. So the longer the gold price holds in this kind of range where these companies are making really good profit, whether it's 1,600 or 1,900, I think the equities will keep building it and go higher.
Well, certainly is going to be a fun time to watch. I think in due time you will be quite correct. We'll see what the path looks like from here to there. Although, again, some good news as we go on through today's episode. There was poor Craig Hemke, was not happy about today's chart. We're going to see silver up there, 2480, takes a dip. Yet, Michael, I don't know, maybe the world is reassured here on the investing.com with the May futures. Quite a rebound today. So, as always, I suppose expecting volatility, or at least being prepared for it, can be helpful. And perhaps before we wrap up, you could let folks know about Reyna Gold, anything in particular that they should be aware of, how they can find out more about you guys.
Yeah, sure. No, thanks, Chris. I mean, we just started trading it in the US on the OTC 2 weeks ago. The ticker is REYGF. So we're delighted to now be available to US investors in US dollars. And I'm coming to America actually on the 18th of April for 3 weeks to meet a number of investors all around the US. And we're the sister company of Reyna Silver. I think, Jorge's been on your show a number of times. And we're focused on gold exploration in northwestern Mexico. So our view is that the west coast of America, as you know, has produced Arizona, Nevada, California, has produced basically 5% of gold ever mined. It's been the powerhouse of global mining for gold. But then across the border in Mexico, it's a fraction. So we're focused on that part of the world. We believe there's a lot of potential. So we have a lot of land, 57,000 hectares, 570 square kilometers. We're working with Dr. Peter McGaw, one of the most successful exploration geologists in Mexico. And yeah, very excited. We just started trading in Canada in January, just started trading in the US a couple of weeks ago. So our initial drill results are due out in April. Well, I'm very much looking forward to getting those out to the market. And yeah, if your investors are looking for a new exploration story, I think now is a good time. Prior to results being released, we're trading at about 20 million Canadian, I think about 17 million US in current exchange rate. We have about 10 million Canadian in the bank. So well cashed up for exploration, and looking forward to some good news for coming over the months. And you know, we're looking forward to making a discovery. We think it's a good gold market. I think if you build up a good gold deposit, you can see from the likes of Great Bear, there's a lot of value to be had there. So yeah, great to be out, and definitely great to be on the US boards on the OTC.
Yeah, and also folks can find you at reynagold.com. Go to the contact tab. That way, if you have any questions to find out if that's the right type of investment. Again, especially on the exploration side, there are different risks than owning physical silver. So please do invest responsibly and just take this as an indication of something. Michael, if what Michael is saying makes sense, then find out more information. And Michael, I sure appreciate the way that you're seeing these markets. And is that you at Reyna Gold Core on Twitter as well?
Yeah. Please reach out please email me if you have any questions. It's michael@reynagold.com, my email. Always happy to chat about the markets. Love chatting about the markets as well as the company, obviously. So yeah, no, great to be here, Chris. Thanks for having me on. Great to chat.
Well, thank you so much. It's certainly, I think it's an exciting time. It's a very confusing time. I don't know that the answers are always straightforward yet. I try and learn as much as I can. And it's great to have someone that has experience with the gold side, but also the economics, and can help answer some questions there today. And actually, in fact, I'd asked if we had any investor questions. So, all right, here's one question. We did have one more time, the symbol for Reyna Gold, for anyone still watching. Can you give that symbol again?
Yeah, it's Rey, R-E-Y-G, and then in the US it's R-E-Y-G-F. There's an F on the end on the US ticker. So yeah, Rey Gold basically is a ticker.
All right. Well, thanks again, Michael, for making some time. We'll look forward to following up soon, and best of luck with all the projects.
Thanks, Chris. Yeah, take care.
Bam.